Right friends, welcome back to News Analysis. This is the first week of 2016 and we are going to discuss about financial inclusion. A committee was constituted. The committee was headed by Deepak Mahanti, Executive Director of Reserve Bank of India, and what are the recommendations and what are its implications we are going to deliberate in detail in this news analysis. What is meant by financial inclusion? Financial inclusion basically means making available minimum basic financial services to the entire population of the country, whether they are below poverty line, whether they are from disadvantaged sections of society, whether they are women, whether they are downtrodden. It should not matter, and making available all the minimum basic financial services to various cross sections of society, that is the financial inclusion. Mere opening of bank account like Pradhan Mantri Jan Dhan Yojana will not be termed as just financial inclusion. Making available all the financial products is termed as financial inclusion. So, if you look at the definition, this is basically access to basic formal financial services which include savings, remittances, credit, poor person, poor farmer, micro enterprise should be in a position to get formal credit. They need not go to money lender. They should get a loan from organized bank. They should get a loan from organized financial system. So, that is the meaning of financial inclusion. Not only credit, government supported insurance, pension products. Example is Pradhan Mantri Jeevan Jyoti Bima Yojana, Pradhan Mantri Suraksha Bima Yojana, Atal Pension Yojana. So, all the insurance products, pension products, bank credit, all these things should be available to the people across various cross sections of society. That is the meaning of financial inclusion. Anyhow, rich will have access to the organized financial system like banks, but the biggest challenge in developing countries is to make poor persons having access to organized financial system. So, that is the meaning of financial inclusion. The committee was constituted, headed by Deepak Mahanti, Executive Director of Reserve Bank of India, based on the observations of the Prime Minister Narendra Modi when Prime Minister was participating in 80th anniversary celebrations of Reserve Bank of India. All of you are well aware, Reserve Bank of India was established in the year 1935. And in the year 2015, Reserve Bank of India completed 80 years, and while participating in 80th year celebrations of Reserve Bank of India, the Prime Minister advised to constitute a committee to work out a medium-term action plan for financial inclusion. Medium-term action plan, that means a 5-year action plan. So, within 5 years, what best can be done in this country so as to bring people into the organized financial system. With that in motto, this committee was constituted based on the observations of the Prime Minister. So, what is the mandate or what is the framework given to the committee? First one is reviewing existing policy of financial inclusion. What are the existing policies in this country with regard to financial inclusion? Then second important point is cross-country experiences of financial inclusion, including various delivery models. Each country may have their own delivery model. If you look at Brazil, that is Bolsa Familia, which got worldwide acclaim, and all of you are well aware about the banking system in Bangladesh. Muhammad Yunus got a Nobel Prize for bringing poor women into the organized financial system in Bangladesh. And various cross-country experiences with regard to financial inclusion. Not only that, various delivery models are to be studied, and finally, after studying all these models, medium-term action plan with regard to payments, deposits and other financial products is to be devised. So, that is the framework given to this committee, and now the committee came up with several recommendations, and we are going to discuss some of these recommendations and why the particular recommendation has got importance or has assumed significance. These things we are going to discuss in this week's news analysis. Look at the first one. First recommendation is unique biometric identifier like Aadhaar should be linked to individual credit account. Each credit account, if I am taking some loan from organized financial system, that should be linked with some biometric identifier. That means I cannot access bank loan from 10 banks at the same time. So as to prevent access to bank loans by the same person several number of times, this recommendation was made. That means if I am taking loan, my loan should be linked to some unique identified number, or you can say unique biometric identifier like Aadhaar, and this information should go to Credit Information Bureau. In India, we have CIBIL. All of you are well aware. Credit Information Bureau is CIBIL. So, if I am taking some loan, that should be linked with unique identifier, and at the same time this loan information should go to Credit Information Bureau, so that if I access some other bank, that should be reflected in my status report. Right friends? So, the first recommendation is unique biometric identifier for each individual credit account, so that the stability of credit system will be there, because I cannot access loans from 10 banks and ultimately I should not become defaulter. So, the basic idea is the stability of the credit system, and so as to make available access of credit to the citizens of the country, right? Next recommendation is so as to ensure last mile service delivery, a low cost solution should be developed by utilizing mobile banking facility for government to person payments. In future, several payments like subsidies, like direct benefit transfers may take from government to person directly. That is the best way to eliminate the frauds, to eliminate the duplication. Directly money can be transferred by the government into the bank account of the beneficiary. That is direct benefit transfer, and the recommendation is by using mobile banking technology, government can transfer money directly to the beneficiary, and for that low cost solution should be developed, and here mobile will become the most sought after instruments in last mile connectivity because of its penetration even in rural areas. As on date, we have around 130 crore population, but the country has around 90 crore mobiles. So, mobile will become the main instrument for these transfers, and mobile will be the fulcrum for future transfers. Digitization of land records and increase the formal credit to agriculture sector. If the land records are digitized, then probably access of loan by the farmers, by marginal farmers, by small farmers will be definitely better, and this will also eliminate duplication. Nowadays, land records are not available properly in several states, because of which access to loans from the organized financial system is not taking place. That's why the committee recommended digitization of land records to increase the formal credit to agriculture sector, and they also recommended this should be backed by Aadhaar linked mechanism and credit eligibility certificates. And several places the committee recommended Aadhaar because of reason so as to eliminate duplication, so as to eliminate fraud, and so as to identify the borrower directly. The benefit, whatever the formal institutional credit, that should directly reach the beneficiary, and that is possible with Aadhaar. In fact, government is thinking of bringing this JAM, and with the JAM, basically all the problems will be solved. JAM means Jan Dhan Yojana bank account, or you can say bank account, Aadhaar number and mobile. If these three are integrated, most of the problems will go away. right? Look into the next one. Phase out agriculture interest subvention scheme and use this subsidy to universal crop insurance scheme for small and marginal farmers with a monetary ceiling of rupees 2 lakh. You may ask, who are small and marginal farmers? Marginal farmers are the farmers up to land holding of 1 hectare. 1 hectare means around 2.5 acres. Small farmers are the farmers who own land up to 5 acres. That means up to 1 hectare, marginal farmers, 1 hectare to 2 hectares or 2.5 acres to 5 acres, they are small farmers, and the committee recommends phasing out agriculture interest subvention scheme. All of you are well aware, government is giving interest subsidy to banks. If a farmer is accessing crop loan, then they will get bank loan or crop loan at an interest rate of 7% up to rupees 3 lakhs, and Government of India is paying 2% as interest subsidy to banks, and if farmer is repaying within time, government is giving another 3% interest subsidy. So, this interest subsidy should be phased out and it should be replaced with universal crop insurance scheme for small and marginal farmers up to a limit of rupees 2 lakhs. That is the suggestion given. Probably the committee has given this suggestion keeping in view the misutilization of this interest subvention. There are several loopholes in the interest subvention scheme because the loans taken in semi-urban areas, rural areas against pledging of gold is also counted under agriculture loans. For agriculture loans, government is giving target. For this year, the target is 8.5 lakh crores of rupees. For 2015-16, the target for agriculture loans given by Government of India to banks is rupees 8.5 lakh crores, and that comes under priority sector lending. So as to ensure that banks are resorting to several practices, the most important practice is against pledging of gold. Banks are giving loans to farmers, and that is counted under agriculture loans, and that is being misutilized in several cases. Probably keeping this in view, the committee recommended to go for universal crop insurance, but in my personal opinion, it is not advisable to completely phase out agriculture subvention scheme because it is very much required, the loopholes can be plugged. But at the same time, universal crop insurance scheme is also essential, but now government is coming out with Pradhan Mantri Fasal Bima Yojana that will take care the insurance related issues. But however, the committee recommended replacement of interest subvention scheme with universal crop insurance scheme, but there are differing views on this. Next important recommendation is the bank should make special efforts to open bank accounts for females, and government can think of deposit scheme for girl child Sukanya Shiksha as a welfare measure. This government deposit scheme Sukanya Shiksha is basically linked with attendance in school. For girl child, this bank account, government will deposit money, and this is linked to attendance in school. This is recommended by the Deepak Mohanty committee. Another thing is introducing a system of unique identification of MSME borrowers and sharing such information with credit bureaus. This is basically with a view to ensure that any firm should access loan judiciously, and one firm should not access loan from several financial institutions, which may lead to default in several cases. So, the sharing of information with the credit bureaus and identification of MSME borrowers with just like Aadhaar-like mechanism. A scheme of gold Kisan credit card with higher flexibility for borrowers with prompt repayment records. This gold KCC, that means if farmers are repaying in time, all of you are well aware, this Kisan credit cards are given to farmers, And if farmers are repaying in time, then a scheme of Gold Kisan credit card is to be introduced with higher flexibility for borrowers. Right? Look into the next one. Encourage multiple guarantee agencies to provide credit guarantee to micro and small enterprises. The biggest problem in this country is accessing loan by micro and small enterprises. They are very small. They cannot give collateral guarantee. Because of that reason, financial institutions and banks may not come forward to give loan to them. For that purpose, so as to act as collateral, the committee recommended multiple guarantee agencies. As micro and small enterprise may not be in a position to give collateral guarantee, there is a need for multiple collateral guarantee agencies. That is the recommendation of committee. Another thing is an ecosystem to foster partnerships among universal banks, rural banks, non-banking financial companies, as well as to-be-born payment banks and small finance banks. An ecosystem is to be developed because of the reason universal banks are strong in certain areas, non-banking financial companies are strong in accessing rural areas, similarly regional rural banks, and in future payment banks will become strong for remittances. Then small finance banks will get expertise in dispersing loans to micro and small enterprises in future. So, an ecosystem is to be developed so as to forge partnerships among these institutions. That is the recommendation of Mohanty Committee. Online registration of business correspondents. So far, business correspondents are being entrusted with only peripheral services. They are allowed to undertake deposits, remittances, but they are not into credit. So, the financial products like credit to trained business correspondents with good track record can be given. These business correspondents are working in interior areas, rural areas. They will have access to rural communities. So, the business correspondents should be entrusted with the dispersal of credit. This is another important recommendation by Deepak Mohanty. Next one is banks to complete linking of deposit accounts with Aadhaar. This Aadhaar, bank account, mobile, this linkage, popularly known as JAM, in future will be beneficial for social cash transfers. With the linkage of these three, in future, scholarships, subsidies, old age pensions, all these can be directly transferred into the bank accounts. That should be the ultimate ecosystem in this country so as to eliminate fraudulent transactions and duplication. Not only that, it will ensure directed transfers to the person. Subsidies should be directed towards the needy persons, and directed subsidies is possible only with the linkage of Aadhaar, bank account and mobile number. Last, some other points I have given here to step up a self-help group bank linkage program and provision of a credit history of all SHG members. Then interoperability of micro ATMs. Micro ATMs works with the principle of biometric identification, and there should be interoperability. That means one bank customer should be in a position to access other bank. Then interoperability of PPIs. PPIs are prepaid payment instruments issued by non-banks. If some non-bank is issuing a prepaid payment instrument, that should be interoperable. It should not be restricted to that particular entity itself. And then the reach of ATMs in rural and semi-urban centers. So, like that, the recommendations are made by Deepak Mohanty Committee, and some of the recommendations are definitely good, and ultimately the country should move towards JAM, the linkage of bank account, mobile and Aadhaar number, so as to ensure government to person transactions, so as to eliminate duplication. Then unique identification of loan accounts, and these type of recommendations will definitely go a long way in stabilizing the credit system so as to make the credit accessible to all the citizens of the country. Right friends, with this let us conclude news analysis. Have a nice day. Thank you.